Hello everyone, my name is Moji. You're watching a Bitcoin Bubble news channel. Regarding, let's say, 3-year danger, I believe the largest risk we are facing is related to space. Is a ludicrous. I believe there is a growing large and quite plausible story of a 1999-like bubble. If such a risk exists, you get an overhang and know that. You could skip a cycle on cryptocurrencies. You could skip a tech cycle as we did back in 2003 to 2007 or anything like that. Thus, it's that the largest danger I believe all left-tail hazards have been eliminated. Raoul Pal, co-founder of Genuine Vision, is the CEO. As you can see, he argues it is a bubble. But I know you people read the title. Tell me what you believe the biggest risk is for Bitcoin and crypto over the next few years. We have significant announcements tomorrow. Regarding Bitcoin, we will be looking deeper at what Raoul believes about this cryptocurrency market where he sees crypto's direction. It offers guidance on how you should be currently participating in the crypto markets, as well as some of his other ideas from a recent interview Raoul conducted before to our discussion. But before we get into that, there is significant news coming tomorrow. For Bitcoin and alternative currencies, this is a crucial week. CPI-PP is what we have. The Fed meeting falls on the same day as CPI. That is, tomorrow we did experience a sell-off prior to the Fed meeting, unlike usual for Bitcoin. But why is this significant? We didn't meet expectations. Actually were lower than what was predicted, since if we obtained a CPI figure comparable to those of March where we truly got worse inflation. That's not good. Thus, on April 10th, when the CPI figures for BTC were released, you could observe Bitcoin's price dropped around 5% on the day, and it continued to drop throughout May. It dropped 22% because people were thinking inflation was returning, and that is not going to be good for Bitcoin. The Federal Reserve is not going to lower interest rates, and we really did not have a significant rebound in Bitcoin until the next CPI reading. The April CPI report showed a slight inflation easing. So we somewhat surpassed the expectations. This is therefore really significant. Make sure you pay attention to those. Let's get back into what Raoul thinks is coming for this crypto market and why you shouldn't really be paying attention to these short-term moves. You may need to zoom out. This report tomorrow, the numbers come out at 8:30 Eastern Standard Time. Let us now hear what Raoul has to say here. From here, my perspective spans. By cycle's end, 2.5–3 trillion already exist. 10 to 15 trillion is it? Simply projecting the normal log trend of this by the end of, let's say, 2032. By 2032, it's $100 trillion. From here, there is $97 trillion of riches just waiting to arrive. Among all the documented history, this is the fastest accumulation of riches. Assuming otherwise, I'm wrong by 50% and am a total moron, which is a good thing. Still, a $50 trillion wealth buildup is happening. That is the whole history of SP 500 and market cap wealth increase. Thus, the wealth that is going to be produced will find use in the space. People purchase upscale homes in beautiful locations. However, many in this field won't venture outside of this space, therefore it gets repeated regardless of VC. Whether it's the chances for creating the applications layer, but essentially individuals search for trophy assets. And so with a 10-year time horizon, I have been purchasing as much trophy assets as I can, as I believe this is the final opportunity you will ever have to get these things at the appropriate rates. This is the point in the cycle where central banks must refi all of the debt and liquidity enters the picture. It's when politicians provide heaps of sweets to their constituents as bribes. Driven by macroeconomic dynamics of this debt refi cycle, it affects all the asset values over the period, but crypto is the one that goes absolutely crazy. This is the point when crypto tends to go vertical. The easiest approach is so once more not fuck this up. Thus, simply have a core portfolio covering the major events. However, if you acquire the other assets, you could earn a lot of money from them the 10 to 20 years of your portfolio. There is some more degen. This is when you will come upon some quite fascinating material. Now, if you return to the traditional banana zone from the last cycle, Slama Avalanche Luna and Matek appeared, and those that the performance in 1 year out of those 4 tokens was crazy. That repeat is what we will see. Who will it be? What will it be? That's a game to be had in the banana zone. I'm not sure yet. And it's part of the fun. You can genuinely degen in and feel like you've truly nailed something. Since most of the game is really meaningless when you limit everything down, everything comes out to be printing money. Hence, the worst is anything happens in the United States. More likely they are to print money, therefore election years are typically quite favorable, and the year following for risk assets only because everyone's buying votes and subsequently helps to sort out the mess and pay debt interest. Hence, there is that military aspect. You now have all the retirees with the baby boomers with all the votes. Well, they want their medical attention. The third component of the equation then is someone must pay debt's interest, and the magic money printer is the only approach to accomplish this. You can observe that there is a global dollar shortage right now. We lost US banks. We passed by a massive Swiss bank. Dollar yen are being lost, right? We have Yellen heading to China twice and a dollar shortage. Proper. She is there to sell bonds. Her other employment apart from voting for Joe, she is the Mike Milken touring China on the road show peddling garbage bonds. China's like, we would like to purchase your bonds, but we lack funds. You so send us funds, and we will purchase bonds. They must so find out how that can be done now. Nobody particularly wants to offer direct swap lines for China. They most likely use Japanese bond intervention, which you know via monetary intervention. Either way, G20 is approaching or G7 is approaching. Everybody will have some magical allowance to have enough money for the system to run forward and everything to happen. Hence, there has not been any freedom since 2008. Everybody seems to me to be, I believe, the BOJ type of instruction everyone has followed suit. Hence, there is not much freedom amongst central banks either. Their issues are the same: aging populations and debt define them all. And everyone pulls the same card, the BOJ and the MOF, that they stopped being independent in the 1990s, but on paper they are. And so all driven by the Treasury and necessary to refinance this debt since 2008. But 90 out of the whole range of options is a derivative. That sums up the whole crypto billions and billions of dollar option market. There is a chance there. Given the number of people using that one counterparty, there is a risk there. All the OTC possibilities are placed up there as a consolidated location for choices. That is thus another risk factor. We need more choices and more options. Houses, some exchanges, platforms, everything just to avoid concentrating it, since derivatives are now used extensively in that part of the world, and we don't know who's going to wind up holding the baby when it blows up.